Hello and welcome everyone to Silver Asset of the Day for the 4th of February 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of? Well, firstly, we have definitely seen that post-European Central Bank sell-off on the metals that we talked you through at the beginning of this week. We've seen gold and silver both pull back and break down on Thursday, breaking back down towards their swing lows. So silver prices, they went from $23 all the way down to $22 per ounce. Gold prices, they went from $1,810 back down towards the 1780 range. And with that, this is in fact exactly what we talked you through on Tuesday's Gold Asset of the Day, to expect this range-bound price action and selling pressure after the European Central Bank announcement. Here is that exact clip. I'm looking for resistance to be coming in here on gold between 1,810 up towards 1,820 US dollars per ounce, with a view that we could get a further pullback later on this week, taking the price back down again towards 1780 and 1770 if we see the usual post-European Central Bank sell-off. So now that we've seen all of that play out in the markets, what can we expect next as we go into Friday? Well, now we have non-farm payroll data on Friday, which again can be a catalyst for explosive moves on the market, particularly on the precious metals. I would certainly look out for big volatility off the back of the non-farm payroll data here on Friday. We've already hit the upper end of the range this week. We discussed with you the 80 and 10 zone for gold, and also we've come back down towards the 1780s level as well. Typically what you tend to get with a non-farm payroll event after a European Central Bank announcement is certainly pressure again later on in the week and later on in the session on the metals. So I would keep an eye out for that, because it can present you with opportunities yet again to buy in at lower prices, like we've already seen over the course of this week. We've taken advantage of the pressure to the upside over this week. In fact, now banking over 1,000 points profit over our gold trades and also copper this week as well, banking into strength as we saw that 3-day impulse move to the upside over Monday, Tuesday and Wednesday. We took the opportunity there to bank 1,000 points profit. So of course, for every one lot contract that you would be trading, that's going to be $10,000 of profit. And of course, for every 10 lot contract that you'll be trading, that's $100,000 of profit. Now, as we go into next week, we also have China back from their 1-week public holidays from the 7th of February onwards, which can further catapult prices higher as we go into next week, particularly as we've seen swing lows get retested here. So silver breaking all the way back down towards 22 US dollars per ounce. Gold again getting back down towards the 1780s. I would look out for opportunities at these zones before the end of the week to look to capitalize on the potential for bounces now throughout the next couple of weeks in February as well. What we've tended to see so many times over the last month is many traders out there, they're using their delayed technical confirmations in the market. They end up getting in right at the top of a move. They get FOMO, they get trapped with their delayed confirmation just as the market is about to dump to the downside. They get rug pulled and essentially they get liquidated, and then they have no exposure. And again, they don't manage to capitalize on the current volatility that we see with the metals, where there's been so many opportunities to capitalize in 2022. So with that, we definitely don't want that for you. We don't want you to keep getting chopped up in the markets, because as you know, technical analysis does not work. If you use that, you're just going to keep getting liquidated in the market and you won't make any money. And we definitely do not want that for you. So with that, you want to be utilizing a research-driven approach to the market, where you're using data, statistics, market intelligence. You're learning the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, the intermarket correlations, the ratios in the market, key areas of liquidity, of course, the capital flows, and alongside that, utilizing how the hedge funds, money managers, banks and institutions are positioning themselves in the markets in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.